All right, welcome back to the Uncrypted Crypto Trading Series. Warren Alcon here, and today we're going to be going over the second class in candlesticks. Let's go. Since the beginning of this course, everything we've been learning has revolved around candlesticks. We started with static support and resistance, then dynamic support and resistance in the form of trend lines, which gave us chart patterns and basic candlestick patterns. In the next two classes, we're finally going to dive right into candlesticks themselves. But before we get into it, here's a quick history lesson. In the early 1700s, there was a Japanese rice trader by the name of Monisa Homa, also known as Sokyo Homa, and he was one of the pioneers in tracking price action. With a basic knowledge of supply and demand, he hand-drew charts and identified that emotion has a factual impact on setting prices. His research on the emotions of market participants served as a foundation for candlestick analysis. And these candlestick techniques were kind of kept secret from the rest of the world until sometime in the 1970s and 80s, because there was a sudden significant cross-pollination of banks and financial institutions all around the world. So then it was finally studied, documented, and brought to the Western world by Steve Nissen in his 1991 book, Japanese Candlestick Charting Techniques. I'll leave a link in the description below so you can check that book out. Now that you know where they came from, we're going to go over what candles are individually and what exactly candles show us. Candlesticks on a chart represent who is in control of price action within a particular time frame. This time frame is often referred to as a period, which we see represented on each time frame. When candles are green, the bulls are in control. Price moves up and the asset's value increases. When candles are red, the bears are in control. Price moves down and the asset's value decreases. So candles represent price action in real time within each time frame. Candles can also give you a clear history of where price came from. All you have to do is look left. And by understanding where price came from, it will make it easier to make our predictions of where it could possibly go. Now we're going to go over the anatomy of a candlestick and how a candlestick is made. There is always a constant battle between buyers and sellers in the market. And this back and forth is what creates the candlesticks that we see on a chart. Now, candlestick anatomy is easy enough to identify. There is a candle body, an upper wick, and a lower wick. The candle body is formed during the opening and closing price for a specific time period. When price moves up, the candle is green. When price moves down, the candle is red. The lower wick represents the lowest price drop for that time period, and the upper wick represents the highest price peak for that time period. So let's get into how these candlesticks are made. Once a new time frame opens up, buyers and sellers set their positions, and what happens within that time frame results in four outcomes of price action. You have an open, a close, a low, and a high. Okay, so what you're seeing is 1 hour of price action on the 1 minute time frame. The opening price of Bitcoin is set at $42,920. You can see how buyers and sellers are just going back and forth. The bulls drove price all the way up to $42,975. Then the bears took control of the market and drove the price down to $42,767. The volley continued back and forth, with the bears finally closing out the 1 hour period at around $42,793, which is finally represented here on the 1 hour chart. So how do we use candlesticks? Well, we use candlesticks and candlestick patterns in combination with areas of support and resistance. Because if price reacted to these levels in the past, it's a good chance that they're going to react to these areas again. In multiple time frames, they're used in order to gain more information and stronger confluence when getting ready to set a trade entry or exit. We also use them in combination with other indicator tools in multi-time frames to confirm confluence, which reinforces what we have already discovered through price action. Okay, Let's get into candles and go over the first types we should learn to identify. First up, we want to look for a candle color change because it's a signal of momentum loss. When a candle changes color, it's an obvious indicator that the opposing side gained momentum in their favor. When a candle color change occurs at or near an area of support and resistance, it can be a strong indication that a trend reversal is possible. Shrinking candles. Also, momentum loss. Candles that get smaller and smaller as price approaches areas of support and resistance, this shows significant momentum loss. And of course, growing candles, it's the opposite theory. Next, long wick candles, especially if they're nearing support and resistance areas. So candles with long upper wicks are an indication that even though buyers are in control of that period and push prices higher, sellers came in and drove price down, shrinking the candle body, indicating a possible momentum loss. Candles with long lower wicks are an indication that sellers are in control for that period and pushed prices lower, but then buyers came in and drove price up, shrinking that candle body, indicating possible momentum loss. Now, be careful of what's called a reverse rejection. It's when you get long wicks that approach an area of support and resistance, but the wicks do not penetrate that zone or area of support and resistance. And this kind of shows that the buyers and sellers, they're losing their steam and price might not bounce off of that area, but could continue to push through it. The inside bar, momentum loss candle, also known as a harami. This is when the recent candle is completely inside of the previous candle's body, indicating a momentum loss due to a failure to make a higher high. A momentum or engulfing candlestick. It's a momentum gain. This is when the recent candle engulfs the previous candle's body. It shows a gain of momentum. Multiple candle rejections at or near areas of support and resistance. This is a trend change indication. So when multiple candles and wicks failed on multiple times to break through a level of support and resistance, it could indicate a possible trend reversal entry opportunity. And of course, what we can do is combine multiple candlestick types to improve our trade quality. See how many different candlestick types can be combined to help you identify any possible trade entry setup. And before we move on, how do you like the content in the series so far? Comment below and give me some suggestions. Also, don't forget to hit the subscribe, like, and share buttons to help support the channel. Now, sometimes when you're going through your charting, there might be some gaps in candles. Now, a gap in a candlestick pattern occurs when an asset price jumps between the close of one candlestick and the open of the next. Typically, we see this on, sometimes daily charts when it opens up at a very different price than the price at which it closed the day before. So, how do we fill the gaps to help us read these charts? We're going to use Heikin Ashi candles. So, to better show you how Heikin Ashi candles work, let's pull up a messed up chart, all right? Search Nexo, N-E-X-O, and here we go. See how this is just an undefinable mess? There's gaps, missing information. You really can't make too much sense of it at first. Go to your upper taskbar. Select the drop-down menu next to the candle icon. Scroll down to Heikin Ashi and click the star. This will add it to your favorites. Okay, see what just happened? Everything looks much clearer. So how does this happen? As we have already learned, traditional candlesticks are calculated by the price open, close, high, and low of a particular time frame. Heikin Ashi candles are calculated a little differently. By using the open and close data from the last period and the open, high, low, and close data from the current period, it creates a visually smoother candlestick. And what this does, it removes the price gaps, filters out noise, helps identify trend direction, momentum, and changes. So what do I look for when viewing Heikin Ashi candles? I look for consecutive candle colors. It indicates strong directional momentum, which can give you an indication of which direction to trade. Look for a candle color change, which indicates a loss of momentum and could possibly confirm a trend directional change. But watch out for false breakouts. Don't rely on one or two candle color changes. Look for multiple momentum candles to form to reveal true end direction. Confirm this by looking into intraday timeframes to confirm multi-time frame confluence. And I also look for Heiken Ashi candle color change at areas of support and resistance to assist my evaluation at these levels. So that's going to finish things up for this candlestick class. Let's get you into some homework and get ready for the next video. So lining you up with homework. Now, as a reminder, always use the tools in TradingView to take notes. Having good documentation is going to build good habits. So in TradingView, note what price action is doing in your top 10. Is price moving up, down, or ranging sideways? Put a note on 3 time frames, our weekly, our daily, our hourly. In those 3 different time frames, can you identify any momentum gain or loss candles, any shrinking candles, long wicks near support and resistance levels? Make predictions based off of what you have learned so far and see where they lead you. See if price action is nearing any areas of confluence. And of course, see what signals you're getting from our checklist so far. We have our support and resistance areas. We draw out chart patterns, candlestick patterns. We look for specific candlestick styles, candle color change, shrinking candles, long wicks, momentum loss candles, Heiken Ashi candles. We check these on multiple time frames. So remember to always focus on possible long and short entry opportunities. In the next lesson, we'll introduce you to another type of candlestick pattern, how they're used, how they relate to each other, and how they react to areas of support and resistance, and the psychology behind how they're made. Thanks for watching. See you next time.